me with a grand total of $46,000 that I am in debt. $46,000? That sounds crazy.
I had no idea about financial literacy. I was never taught how to handle money, and that put me in like $20,000 of debt.
Americans are drowning in red ink, in about $1.28 trillion in credit card debt, to be exact.
We have to see that again. $96,728.12. I hope that's a Photoshop, but maybe it isn't. That is a lot of money on a credit card. Whoa. Welcome back. We're going to be talking about credit card debt. Things are getting even worse in this country in terms of credit card debt. We're even in more debt than ever before. Let's get into it.
Y'all with the credit card debts, how are y'all getting 50K? 50K to 100K in debt? Like, how? I mean, I know how. Y'all getting too many credit cards. Because I just want to know also why? Why the fuck? Y'all don't got no limit? Y'all didn't say, you know what? This is too high. I don't think I could pay this. Or am I going to pay this for the rest of my life? Can it be me? Couldn't be me. Not gonna lie. I was at 10K. I'm less than that now. But even still, I'm like, once these credit cards are paid off, no more. If I can't afford it, I ain't buying it. That's literally how I'm living. I do not want to be in debt. Living debt free, that is my goal. And honestly, I think I'll have more money if I'm debt free. But yeah, I pray for y'all.
That's probably my favorite filter of all these goofy filters you see on social media. That face just always makes me laugh. But we're talking about the question why people are in 50K, 100K in credit card debt. Like at that point, did nobody pump the brakes? And I'm going to tell you exactly how it happens. Obviously, it's not going to happen all at once. It's $1,000 here, $2,000 there, a balance transfer, a new card with a great intro rate. And before you know it, you're just sitting there just paying out minimum payments in your way into a debt, into a hole that's getting deeper every single month. The interest alone on $50,000 in credit card debt, I mean, we're talking anywhere from probably $800 to $1,200 a month just in interest. You're not even touching the principal. You are renting money at the worst possible rate. At least $10,000 was her breaking point. She said something that really made sense. You know, once these cars are paid off, no more. And that's the mind shift that you need to have, because the problem isn't just the debt, is the relationship with the spending that created the debt in the first place. You can pay off every single card and be right back in the same spot in 3 years if nothing changes mentally. She also said something that made sense. She'll have more money debt free. It may seem simple, but it makes sense. That monthly payment that you're making to Chase or Capital One, that's a car note, that could be groceries, that could be your money. Debt free isn't just a financial goal, it's a cash flow strategy. She gets it. Pray for those who don't.
The American consumer's debt problem just got bigger. New numbers from the Federal Reserve Bank of New York reveal that Americans are drowning in red ink, in about $1.28 trillion in credit card debt, to be exact. That's up about 5.5% from just a year ago.
Broken down, that works out to nearly $6,000 owed per person.
And you got to ask yourself, why is this the case? If you really look back kind of over the past 5 years or so, especially during COVID, you had a lot of consumers just blowing through their savings. I remember seeing people tap into their 401ks to try to make ends meet. And what you have now is credit cards being used to really bridge the gap between the cost of living and actually what people are being paid. And for a while, obviously, wages didn't keep up with the cost of living.
I mean, we got to look at that right there. $1.28 trillion in debt, $6,000 average per user. So we're all in debt. I mean, 2.28 trillion with a T. That's not just a personal finance problem anymore. This is a systemic crisis that's wearing a personal finance costume. And the number that they dropped, $6,000 owed per person. That's the average, which means for every person sitting at zero, someone is sitting there with $12,000 just to balance it out. So that financial influencer, he said something that was absolutely true that doesn't get enough attention. Credit cards became the bridge between what things cost and what people actually make. That's not necessarily reckless spending for a lot of people. That's survival. Rent, groceries, insurance, all that went up. And the paycheck barely moved to cover all this. So what do? You put it on a card and you tell yourself you'll figure it out later. Later became $1.28 trillion. And the COVID situation definitely makes a lot of sense. It was definitely real. People burned through a lot of their savings, crashed out on 401ks, took the penalty and everything, a lot of layoffs just to keep the lights on. And when the stimulus dried up and the bills came back, the credit card was the only thing standing between them and complete collapse. And here's the part that should keep you up every night. Interest rates on credit cards right now are averaging between 21 and 22%. So that $1.2 trillion, it's growing while people are sleeping. The banks are not losing sleep. We are. So this isn't just a debt problem. It's a wage problem with a credit card on top of it.
Those credit card rewards, they trapped me. When I got this card, it was strictly for travel rewards and I was getting free hotel stays out of it. Now I have paid for all of those free hotel room stays in interest. So this card is currently at $6,427. My minimum payment normally is $190. My interest rate on this card is at 12%. Now, let's scroll back up. Is why my Chase Sapphire card is at 12% because I have enrolled in a payment program. This means they shut off my card for a year, meaning I get no more rewards. I can't use the rewards I have. I can't even swipe the dang card. But they did lower the interest rate and they lowered my minimum payment to a fixed payment of $190. And then they set up auto pays. This payment program is ending March 28th, meaning I have to have this paid off or my interest rate's going to jump back up to 20 something terrible percent.
She said free hotel stays. Interesting, because that's exactly how they get you. The rewards program is the hook. The interest rate is the line. And by the time you figure it out, you're just a fish. They got you. Hook, line, and sinker. Here's what people don't understand about the travel reward cards. They're only free if you pay the balance in full every single month. The moment that you carry a balance, those points are no longer a bonus. They're a bribe. Chase, Amex, Capital One, they design these programs knowing that a percentage of people will chase the rewards and pay for them 3 times over in interest. It's not a glitch in the system. It is a system. But she finally realized I need to reel all this in. I need to pay all this back. And she did something smart. She called and got into a hardship payment program. A lot of people don't even know that's an option. You can call your credit card company, tell them that you're struggling, and sometimes they will drop your rate significantly. She got it down to 12% from what she probably had, probably 20 something percent. So that's real money saved. Now the clock is ticking. She got to figure that out by March 28th. That interest rate will jump back up. But the lesson here isn't don't get a travel card. The lesson is understand the product before the product understands your spending habits better than you do.
Baby, y'all, I done did these numbers. Y'all better sit here and watch it because, baby, when I say I'm so sad and depressed about it. But hopefully, baby, bankruptcy covers everything. So the only debt that I am in is credit cards and this truck that I have here. Therefore, I have 8 credit cards. I had my first credit card like in 2018. Okay. So another thing that is going to be included in this number is my 8 credit cards. I had a bank account, my bank account now, that I had since my very first bank account, about 20 years ago. I had 2 checking accounts. One was for bills and the other one, it was just my regular checking account. So my bill one, they gave me $1,000 overdraft protection. Therefore, I kept going into the negative all the time because like I'll pay a bill and they'll pay for it. And they'll just charge me like $37 because I went below the negative. Okay. I paid back like $1 every time I got paid or something. I really wasn't putting nothing in that account to satisfy them. So they closed it at $550. And recently, I figured out that I had the overdraft protection, okay? So what I did was when I used to get paid, once that money was gone, I had this $1,000. So I used to transfer that extra money into my grandmother's checking account. And they'll just charge me like $37 for going into the negative. So I was doing that so much, baby, they closed that account at $365. So I don't have no checking account. They closed both of my accounts. I said, okay, cool, baby. I don't care. So that, and also I want to see if I could file my Progressive, because for Progressive, I did not pay them 1 month for my insurance and they canceled it. And I'm like, okay, since you want to cancel it, I ain't finna pay you because I was finna pay it. It was a couple of weeks late, but still, you ain't finna get no money out of me now.
So you see this situation here. I mean, we're already in deep waters and she hasn't even given us the total yet. 8 credit cards, 2 checking accounts, both closed. Using overdraft protection like it was a side hustle. Transferring money to her grandmother's account and just eating a $37 fee every time. I mean, lady, that's not a system. That is just a leak with a schedule. And obviously the bank is going to say enough, close both accounts. And now she's going to be in a system where opening a new checking account is going to be a fight. People just don't realize getting flagged in these systems is like getting a credit hit. But for banking, a lot of major banks won't touch you. Why would they? And then we're talking about insurance. She goes to Progressive, cancels her insurance for being late. So she decided she's not going to pay the rest of the money. That's not a power move.
So the grand total is $15,241 in credit card, checking, and Progressive. $15,000. I know. What did I spend my money on, baby? I like to eat. I like to just swipe my card most of the time. And my biggest thing was like, okay, I'll make this purchase today. And I got a month to pay it off. I'm going to have that money. And when that month came, baby, I ain't have it. And then I ate it up when I lost my job. So now my truck, how much it's worth is $25,000. $25,557. Now with tax, it's $31,461. So that leaves me with a grand total of $46,000 that I am in debt. $46,000, that sounds crazy, but hopefully bankruptcy is going to get rid of most of all of that. So that's on a positive note. Now I am sad about closing my credit cards because, baby, I used to be on top of my stuff. No lie, used to be on top of it, baby. Used to love getting them new credit cards and stuff like that. But $46,000, baby, I'm finna go smoke.
$46,000. And she's really sad about losing the credit cards, not the debt. The credit cards themselves. And it looks like she's not really learning from her mistakes. I mean, the bankruptcy is the way that she's going to be able to clean this all up, but it seems like she has some issues with spending and doesn't have really strong financial literacy at all. It seems like all she did was when she wanted it, she bought it and she couldn't control herself. So yes, bankruptcy may help, but this isn't the end. It's not a clean slate either. This stays on your credit report for 7 to 10 years, depending on what chapter you filed. Every apartment application, every job that runs credit, every future loan is going to be a conversation. The goal coming out of bankruptcy has to be rebuilding intentionally. Secured card, low payment, paid off every month, rebuild the right way this time. Be honest, I don't think she's going to be doing that. Just by her attitude, I think she's going to have a full lifetime of making bad financial decisions. Maybe, hopefully, she'll get it. But the fact that you had 8 credit cards, no job, bought this truck, trying to finesse the checking account, you can't even get a checking account now. So yeah, she's pretty cooked.
Credit cards are one of the most expensive debts that you can carry. I'm going to give you some not so fun facts about credit cards to really open your eyes. Most credit cards have APRs over 20%. If you compare that to mortgage rates or student loans, those are way lower than credit cards. Minimum payments are designed to keep you in debt. If you have a credit card balance of like $3,000 and you're only paying the minimum and that interest rate is 24%, you are going to pay thousands in interest. People spend more money on cards because it doesn't feel real. Swiping is the easy part. It's so easy to swipe and tap. Paying it, that's the hard part.
I mean, we need to continue to have these conversations, even though a lot of it is people say they know, but they don't, considering we have $1.28 trillion in debt. So she's talking about the minimum payment piece because that's the biggest trap most people don't see until they're already in it. Credit card companies legally have to tell you on your statement how long it will take to pay off your balance only using minimum payments. So you look at that number next time. So for a $3,000 balance at a 24% APR, minimum payments only, you're looking at 10 plus years and paying nearly double what you originally spent. They don't hide that. It's on your statement, but no one reads it. And she's absolutely right about the psychological piece of all this. Cash feels real. It's physical. You hand over a physical bill, registers as a loss in your brain. But tapping a card, your brain barely processes it as a transaction. The credit card industry knows this. The whole contactless payment revolution wasn't built for your convenience. It was built for your impulse.
High credit card utilization will drop your score fast. How much money do you think credit cards are making in interest alone? Wait. Over 100 billion. 100 billion! A missed credit card payment can hurt you for years. One single missed payment for a 30-day period will hurt you for years. 7 years before it drops off. Rewards are tiny compared to interest. You get 2% in cash back, they get 24% in interest. Do the math. This is why it's so important to be educated on credit cards, because they can be a great tool if you know what you're doing, but if you don't, that's your downfall.
$100 billion in interest every year. That's not revenue from selling a product. That's not revenue from a service that improves your life. That's money extracted directly from people who are already struggling to make ends meet. And that is the business model. 2% cash back versus 24% interest. We are not winning that trade, not even close. The rewards are designed to make you feel like you're playing the game when you're really the game itself. That's why credit cards need to be a tool. If you pay in full every single month, never carry a balance, and treat it like a debit card with benefits, you can come out ahead. The problem is that the system is engineered to make that discipline as hard as possible. Late fees, confusing payments, auto-enrolled minimums. Know what you're dealing with, then decide how to play it.
All right, this is how I put myself in $7,000 of credit card debt right out of college. So I'm a 28-year-old former college athlete, and I had no idea about financial literacy. I was never taught how to handle money, and that's okay, because now I know, and I'm going to change the narrative. I'm going to make sure that my children and their children know how to handle money properly. So if you're on that journey as well, make sure you just leave a follow. Let's get to it. So coming out of college, I went to college for free. I took out some loans just to have some money in my pocket, obviously not knowing that I would have to pay it back. I did graduate, and then I went back to school to get my master's. And that put me in like $20,000 of debt. But when I got out of school, I wasn't even really paying attention to that. I ended up getting a credit card. And this is where I messed up, because I got a credit card. Limit on the credit card was way too high for what I was getting paid from my job out of college. The credit card limit was $5,000 out the gate.
So I'm gonna stop it right there real quick. He went to school for free, took out loans anyway to have cash in his pocket, not knowing that he have to pay it back. Financial literacy, obviously he didn't have it. No one sat him down and explained what a loan actually was. Most kids out there just sign it and figure it out later, unfortunately to a detriment. So that's the one thing about college. They could teach you all types of stuff, right? All the calculus, the ancient civilizations, but basic personal finance, optional at best, non-existent at worst. I mean, this is a person that came out of a D1 program, whole life structured around practice and games, and then suddenly was handed a $5,000 credit card line with zero context for what that actually means. It's ignorance. It's a setup. They knew exactly what they were doing, offering that limit to a 22-year-old fresh out of college.
So I ended up being stupid. I bought a new MacBook Air or a MacBook Pro. Basically I didn't have no cash. I was just buying it. So that's lesson number one. Do not get a credit card if you don't have cash to buy the product that you want to buy. Second, I didn't even realize that usage was a thing. It had been over 90% for a minute. And then on top of that, you realize like you gotta pay these things. You gotta pay monthly payments. Then I start getting late payments. Now it's getting into collections. I was just ruining my credit. But since I started my business, I've been doing a lot of side hustles. I was able to clear all of that $7,000 worth of debt in pretty much a year by just staying down, keeping my head down, and investing aggressively, and just pulling from my investments and paying it all off.
MacBooks are expensive. Especially a MacBook Pro. I bought one last year. It's very expensive. So if someone just coming out of college, you're paying on a card that you couldn't pay cash for. And his credit usage rate is sitting at 90%. Late payments will stack up. He walked through the entire spiral in 30 seconds, and every single step of it was textbook. When you have a credit usage rate at 90%, what it actually does to your credit score, it just tanks it. Anything above 30% hurts you. Above 90%, you could be losing 100 points or more from that one factor alone. And you don't even have to miss a payment for that to happen. But the great thing, he was able to pull out. He had some side hustles to get himself together, kept his head down, pulled from investments and paid off for the year. And that's discipline. He realized, hey, I made a big mistake and I had to figure that out. I mean, $7,000 in 1 year, that's roughly about $583 a month that thrown at debt on top of your regular expenses. He had to do what he had to do. He made it inconvenient on purpose. And that's the only way this whole thing works.
Credit Tip Tuesday. Do not put anything in your name for anyone. I don't care who it is. Mama, sister, brother, uncle, cousin, boo, bae, husband. Don't do it, because 9 times out of 10, you're going to be held responsible. Don't do the loan. Don't do the apartment. Don't do the car. Don't do it. I'm telling you, because it's going to come back and bite you. And you're going to be held responsible for making the payments. And if you don't make the payments, guess what? Now you're stuck in the hole and your credit is messed up. All because you made an obligation to take care of someone else's debt. All because you decided to be nice, you know what I mean? And be considerate, you know, and try to be a good person for someone else and help them out. And guess what's going to happen? You're going to get burnt. So no, don't do it.
And that's the sad part about this, but she's absolutely right. It's really hard to do that. She's saying, don't do it for mama, sister, brother, uncle, cousin. She went down the whole family tree and said no to all of them. And she's not wrong. Co-signing is one of the most financially devastating things a person can do. And it gets dressed up as some kind of loyalty test. I'm just trying to help you out. They need a chance. No one else would do it for them. And that's the story that you tell yourself going in. But the story that you tell yourself coming out is a lot different, because now your credit score is bleeding. You have a collection account in your name for a car that you never drove, and that family member stopped picking up the phone. And here's what people don't understand about co-signing. The bank isn't asking for a co-signer because they believe in the other person. They're asking because they don't. They ran the numbers and said this person is too risky for us to extend credit to alone. Then they ask you to bet your financial reputation on the same person the bank just said no to. Think about that. And it doesn't matter how good their intentions are. Life happens. They may lose a job, relationship falls apart, priorities shift, and guess whose name is still on that account? Your name. So she's preaching for people, and I think people need to hear it. Your credit is your financial reputation. It took years to build. Don't hand it to someone else to manage. Not to anybody.
Way more people are in credit card debt than you can even imagine. I mean, next time you see someone on Instagram flexing, going to Greece, Turks and Caicos, Mykonos, whatever, just know there's a good chance they're in credit card debt. They don't got it like that. They're using someone else's money to fund that lifestyle. Everyone's always trying to flex the Gucci, the Louis, the vacations, the cars on social media. But in Q3 of 2025, U.S. credit card debt hit $1.23 trillion. That means the average American, pick anybody off the street, your teacher, your doctor, your lawyer, is in $6,523 of credit card debt. And that's up from 2024, over $100 per person. And what makes it even worse, the average credit card interest rate for those people is 22.83%. This is becoming a serious problem. The American society is becoming more and more reliant on buy now, pay later, credit cards, payday loans to just live. Eventually, these corporations always want their money back, and they will sue you to get it if they have to. Yes, it truly is that deep. Pay down your credit cards. So next time you see someone on social media bragging about the latest, greatest thing they just bought, just know they're probably in credit card debt. Go ahead and let me know down below, how much credit card debt do you have?
I mean, that's true. When you see people out there flexing, most likely they are struggling and they are in some kind of credit card debt. The whole treat yourself culture and you only live once mentality was essentially marketing campaigns that credit card companies benefit from tremendously. And we talked about the number already. He said 1.23. I think it's higher now, obviously. And the reason why this number is wild and how it's even bigger, your doctor, your lawyer, your teacher, all on the same boat. Debt doesn't discriminate based on income or education level. High earners have higher limits and just more ways to be broke. So you look at that average interest rate, 22.83. That's not a financial product. That's a financial predator with a rewards program attached. What's the lesson? Pay down your cards, ignore the flex on social media. The person posting that vacation might be making minimum payments on it for the next decade. Whether you're at $2,000 in debt or $46,000 in debt, the number isn't the point. The point is knowing how you got there and having a real plan to get out. Stop chasing the rewards. Stop co-signing for people who banks already told no to. Stop letting the minimum payment feel like progress, and stop comparing your real life to someone else's borrowed highlight reel. Get your money right. That's the whole message. Let me know what you guys think about these stories in the comments below. Thank you for taking time to watch this video, and I'll see you guys in the next video.